Hi everyone. Today we would be analyzing the results and investor presentation of Bank of Maharashtra. So let's deep dive into it. Interest earned. The bank has earned an interest of 6,017 crores versus 5,874 crores a quarter earlier and 5,067 crores a year back. The bank total income stands at 6,809 crores versus 6,768 crores QOQ and 5,735 crores YOY. Interest expended of the bank is 3,210 crores versus 3,075 crores quarter on quarter and 2,635 crores year on year. This interest expended number is important because interest earned minus interest expended gives you the NII, that is the net interest income. The operating profit of the bank has dipped slightly to 2,200 crores from 2,294 crores a quarter back and 1,920 crores a year back. So we can see that the bank has shown good operating profit increase YOY. The provisions of the bank have decreased from 984 crores a year back to 822 crore. This is a very good sign because it is an outlier in the industry. This time in quarter 2 FY25, we have seen that in general the provisions of the banks have increased a lot. You can see that trend even in the NBFCs. Profit of the bank is 1326 crores versus 1293 crores quarter on quarter and 919 crores year on year. So the year on year number is quite staggering. Percentage share held by Government of India, it is showing here 86%. Actually, it is at 79% due to QIP fundraising. We would see that later in the video. CAR is at 17.26%, which is a acceptable range. Earning per share, again, showing a good increase from 1.3 to 1.87 year on year. In general, we would want to compare the numbers quarter on quarter. Percentage GNPA from 2.19% to 1.84%. And look at the figure of the net NPA. It is at 0.2%. So it means that bank has already done provisions for almost maximum part of the NPAs. You can compare it with the likes of HDFC Bank and it is still better. ROA stands at 1.74%. Operating margin is at 32%, a very good number, and net profit margin is at 19.5%. The net worth of the bank is 20,407 crores. Now, let's look below at the segment results. The corporate banking profit has decreased from 711 crores to 624 crores, and retail banking profit, there is a good increase from 220 to 444 crores quarter on quarter. Bank has a provision coverage ratio of 98.31%. Again, this is a very good thing. And yeah, so I think everything is covered in the results section. Now let's have a look at the investor presentation. These are the macroeconomic highlights, not required because nothing specific to Bank of Maharashtra. You can have a look at them. Year-on-year numbers, net profit increased by 44%, operating profit increased by 14.66%, NIMs have increased year-on-year, ROA, ROE, everything looks good. So year-on-year, it is the numbers are very good. Gross NPA has decreased, net NPA has decreased, gross and advances have increased by around 19% and retail by 22%. Uh, this page shows the total business done by the bank. Uh, the bank has a total deposit of 2,76,000 crores versus 2.67 lakh crores a quarter earlier. The important number here is the credit deposit ratio. It is at 78.72. It means that for every 100 rupees deposit, you are giving advances of around 79 rupees. And here the number shows the deposit and the advances given by the bank. This number it is a good sign that it is at around 79. Because if this number reaches at around 100, you would have limitations in giving new credit. So it means that that Maharashtra Bank can give new credits currently. This credit to deposit ratio was at around 100 for HDFC Bank, and that was the reason why bank was looking to accumulate deposits. Here we see CASA is at around 49.29%, very good number. And bank basically has bifurcated its advances into four sections: retail, agriculture, MSME, corporate. They call these three sections together as RAM, which constitute around 62.13% of total advances. The agriculture sector gross advances is at 33,000 crore, that figure. Bank has already has investments worth 78,129 crore rupees, a slight increase as compared to last quarter. Again, the operating profits have increased. We have seen that earlier. Net profits have increased. QOQ operating profits increment. Look at this figure of net profit increment in the last 5 years. It has grown at a staggering pace. Bank net interest income has increased. NIMs have increased at a good pace. It is a very good sign. This page shows the non-interest income, that is the fees and commission income. It is not so important. Uh, this page shows the expenditures made by the bank. Again, not so important. They have mentioned about the expenditures, all the sort of expenditures that is happening in a bank. Provision for NPAs is at 598 crore in this quarter and 193 for standard asset provisions. So total adds up to 822 crore. Uh, this is an important page. It mentions some key ratios. Cost of deposit of the bank is at 4.66% versus and cost of fund is at 4.2%. Cost to income is 38.81. Although the cost to deposit and cost of funds have increased slightly, but in a high interest rate environment, these numbers are good numbers. Now let's have a look on the yield on advances. They have increased. It is a good sign, 9.21% versus 8.96%. Quarter back yield on funds have also increased, and yield on investments have reduced slightly. So, ROA, ROE, we have already discussed. It is looking good. Uh, these are the bifurcation of the loans given. In retail, they give around 26% of the loans. Agriculture, they give 15%. Corporates, 37%. And MSME, 20%. These are the exposure to different sectors. Now we will have a look at these figures of asset quality. The gross NPA has increased considerably in the past 2 years from 3.4 to 1.84, and net NPA has reduced from 0.68 to zero point 0.2. So the trend is looks very good. Provision coverage ratio, it is at 98.31%. Can't ask much. Credit cost, the lower it is, the better it is for the bank. It has reduced from 1.8 to 1.1%. Slippage ratio, this is an important figure. Slippage means the amount of new additions in the NPA in the current quarter. And the new slippage minus the write-offs and the recoveries gives you the net increase in the gross NPA. So slippages have reduced from 1.76% to 1.18%. This is a very good sign because you can see in other banks the slippages have increased, especially in this Q2, in this quarter two. You can see that the microfinance and credit card sector has experienced significant stress. So slippages have increased for most of the banks. And in these environment, if it is showing such a figure, it is a very good thing. Here we can see more about the asset quality. So the opening closing level was 3,870 crores at in June 24, which is the opening level for September 24. And here are the fresh slippages, which are flat, you can say. So 606 crore is the fresh slippages minus the reductions for various reasons. It can be recoveries, upgrades, etc. 472 crore is the recovery, and 606 crore is the fresh slippages. So net increase is 137 crore, which is added to the opening level, gives you the closing level of the gross NPA. Here it is important to see that retail sector NPA is at 0.35%, which is very good. MSME is 2.39, which is manageable. But look at this, the agriculture sector. It is showing an NPA of 7.86%. It was 9.63% a year back. So this means that the agriculture sector had experienced stress. So why it is not reflecting in the net NPA section? Because bank has already made provisions for it. That can be the only reason why we see the net NPA figure is low. We can see the bifurcation of the retail credit. Again, we have seen these figures. CR is at 17.26%. And yeah, Government of India holds 86%. This is the old data. Bank has raised 3,500 crores via QIP. The fund was raised at 57 rupees on October 5th. So basically, and the Government of India holdings have been reduced to 79.6%. So if you are buying at a price below 57.36, it means that you are buying at a price less than what institutions had bought a month back. And again, the book value of the bank is 28.82 rupees. Uh, 55 divided by 28.82 would give you the uh, price to book of the bank. Uh, Again, if you these there are some more data which you can read. Uh, as per now, I think the investor presentation important points analysis has been done. Thank you for watching the video. And if you like the video, do share and subscribe.